Hello students and hello traders, here's Jean-Pierre Muhila from UTC Fx. Welcome to today's video. We are going to teach you the important reasons about support and resistance. But let's meet after the intro and the disclaimer. Welcome back to our YouTube channel UTC Fx. Here's Jean-Pierre Muhire. As I said before, today we are going to teach you the important reasons about support and resistance. And why do we need to teach you support and resistance? It is because support and resistance, it is the universal tools which are used by many traders to trade Forex, stock, options, and cryptocurrency. It is universal tools. Therefore, if you know them and you know how to use them properly, they can help you to make tons of money in Forex trading. So in this today lessons, we are going to teach you what is support and resistance, how to draw support and resistance, how to trade the support and resistance, and we will give you practical example on how to trade support and resistance. Note that support and resistance, as I said, they can be used to trade in crypto, forex trading, stock market, any asset, indices, any asset you wish to trade. They are support and resistance reversal tools. You can use them to trade your asset without a problem, and if you do that properly, I guarantee you that you will get profit. Let's see what is support. You know, if you have followed us a couple of times ago in our beginners calls, we have we have taught you that the market can either trend up or down. Even though sometimes it goes into sideways, where the buyers and the sellers are in equilibrium and they don't find the winners to push the market in any directions. But whatever happens, the market will always move up or down. Therefore, it is the lower prices where the support fails to continue lower when it is pushing down, and that is the price which the price has trouble to continue falling down. It is what we call support. The support also can be also defined as the area where the buyers are waiting to press the buy orders in order to move up with the price. That is briefly what we call support. Support, it can be weak or strong. We will show you the examples, any practical example we will show them. When the support breaks into the support and continue lower, it means that that support was broken, and it means that that support, it was weak. And once the support get troubles to multiple times to break through the particular price or particular level, and in that case we say that the support, it is strong. And without drawing, let's see what is the resistance. Resistance, it is the opposite of the resistance. Normally, no price will, let's say we have a price which is trending up, then no price will continue to trade always up. There will be a price where the market will fail to continue up and then bounce down. This price, where the asset is failed to continue higher, it is what we call the resistance. It can also define as the area or the price where the sellers were waiting or were willing to sell the asset or the currency if you are for Forex. As I said, resistance can be sometimes the price can break through this resistance and continue higher, and if the price breaks through and continue higher into this price, it means that our resistance was weak, and the resistance, it is strong. If let's say the price after the price make this resistance, it comes back, tested and referred to break it up, and then it goes up and then turns back. You see, the price has tested this resistance 3 times and it prefers to continue up. This means that this resistance, it is strong. So that is what we call briefly support and resistance. I hope you managed to understand what is support and resistance, and to give you more clarity about the support and resistance, let's make another practical example in order to make sure that you understand this concept very well. Let's say, for example, let's say you are inside your room. You are into your room, and this is the ceiling. This level is the ceiling, and this is the floor. You see, and let's say you have a tennis ball in your hands, and then you hit it strongly to your floor or to your ceiling. Let's say for this case it's to the ceiling. If you hit too strongly your tennis ball on the floor and you are in your room with a ceiling, because the floor of your room is very strong, this tennis ball will bounce up. So this is what we call support in trading. It is this level where the price has the has trouble to continue lower. And because you hit your ball with too much strength, of course it will bounce up. But if it continues up, it will find your ceiling here. And even though it is till you hit the ball with too much energy, it will not be able to, the tennis ball will not be able to break your ceiling unless your ceiling it is made with papers. But if your ceiling is strong enough, the ball will bounce again down, and then and so on until it loses its momentum and stops. And this level where the ball has failed to continue higher, it is what we call resistance. I hope with this practical example you managed to understand where the difference between support and resistance, and what's the difference between support and resistance. So now let's see how to draw a support resistance. Drawing support and resistance, it is very simple. All you have to do it is to find a recent swing high or swing low in your price, and then you draw an horizontal line or a box, whatever good we find good for you, and then that is your support or resistance if the market is dropping down, and it is resistance if the market it is heading higher. Let's do an example here, give you another example. Let's say we have a market which is pushing higher like this, and then the market failed to continue higher and then bounce below here. This level where the price has failed to continue higher, it is what we call the resistance. So, and for the case of a downtrend, let's say we have a market which is trending down, and then at this price where it failed to continue lower and bounce back, it is what we call support. Okay, and as I said, the support can be strong and can be weak, especially in an uptrend. This resistance, even though it is there, it is weak. The market could continue up and can break it and continue up easily, because that is what makes a market to be an uptrend, because it is continuously making new higher highs. So which means it is making breaking this temporary resistance. The resistance will be considered to be strong if the resistance after arriving to this level failed to break through it at least 2 times, this resistance will be considered as a strong resistance. Then this will be a good indication that if the market reaches this level again, the high probability will be that the market could again continue bounce down. Therefore, if you know this resistance and that it is resistance and you know its strength, for a trader, it will be very easy for you to know what to do once the market comes back from at that level. What is the use of support and resistance? Why do we need to teach them? As I said in the introduction, support and resistance are universal tools which are mostly used by technical traders. And one of the things which is support and resistance will help us to do, it is to time our entry. Let me explain. Let's say you've seen a significant, strong resistance here, and if the market comes back on this resistance because it is very strong, you know that it's because it has been tested 3 times. The high probability that if the market tested this level for the 4th time, the high probability is that it will bounce down. As the trader, it will help you to time your entry. If it comes back there, as a professional trader, you will need to enter here because you know that it is, you will set your entry here, and then if the market bounces down, you will be in and you will go down with the market and you will be easily make the profit. Note that you entered here because of this resistance. That is the first thing which support and resistance will help us to do. The second thing which support and resistance will help us to do is to set our stop loss. Now, because you know that this is the resistance, you know that the market can fake us and continue and then continue up there. And if you do not have a stop loss, you can wipe out your entire account. Therefore, it is recommended and it is good always to trade with a stop loss. So you will need to take your stop loss and press it above this resistance. So, and this is to make sure that if the market turns up, you will be exit and breaks above this resistance. It means that it is a good indication that this resistance it is no longer strong. It lost its strength. Therefore, you need to get out of the market and with this stop loss order. The third things which support and resistance will help us to do is to set the exit or the take profit. For this case, it is the take profit. Because no market will trend always. Let's say you entered here and the market continued to lower. Of course, you are in a profit, but you will find that there is a strong support here because the market has failed to break below this support more than 3 times. The high probability is that if the price comes back here, the probability is that it can even bounce back up again. Therefore, you will need to set your take profit here so that before even the market bounces back, you need to get out with your profit. That is the 3 main things which we do and we help with support and resistance. And I hope you understood them properly. And this is what I become to explain normally. The best way to trade the support or the resistance, you will need to combine it with candlestick patterns. And there are 2 ways of trading support and resistance. The first way is to trade a bounce, and the second way it is break. Because once the price is at a major level, which is a support or resistance, the only 2 things can happen. It will either bounce back from that level or it will break it. Therefore, as trader, we are going to show you how you can do these 2 things. And the best way you will know whether the support is going to hold or is going to break It is to combine a support and resistance with candlestick pattern. So let's see the bounce. For the bounce, let's say you have support. You have a stronger support in a downward market there. So here, what you are going to do, if you know that this support it is strong, it will be to wait for a bounce, a signal, and this is the candlestick pattern which is going to help you to know whether this support it is holding. And once you see the bounce, you will enter after the bounce and you will set your stop loss below your support. That is what we call bounce technique on support. For resistance, let's say you have a resistance there in an uptrend market, and after an uptrend, the price is reaching that level, it shows you the signal that it is bouncing down. Then you will need to set your entry after the bounce, and your stop loss will be set beyond your resistance to make sure that if the market made a false break, you were no longer in the market, you need to exit. This is how we do a bounce technique on support and resistance. The second way, as I said, it is a break, but there are two ways to trade break out of support or resistance. There is aggressive way and conservative way. The aggressive way, to trade the aggressive way, it is when the market fails and the break. The aggressive way is to enter immediately after the break of the resistance, and the conservative way, it is to enter the support or resistance, is to wait the retest of the broken resistance or support, because the resistance and the support have a tendency to swap the lower after they are broken. This means that if a resistance is broken, it has a tendency to become support, and if the support is broken, it has the tendency to turn support. So therefore, for conservative way, it is to wait the market to retest the broken level and then to enter there. They both have a disadvantage and the advantages. We are going to see them with a practical example. For aggressive way, let's say you have a resistance in the market. After the market is reaching at this resistance, it breaks through it. So for aggressive way, after the market breaks the resistance, you immediately set your entry setup, and your stop loss will be pressed below the stop the resistance. This have the advantage. The advantage is that if the market continues up, you are already in the market and you have not missed up this trade, so you can easily enjoy this profit. The disadvantage, the market can do a false breakout. It can trigger you and then reverse back inside here. Then you will be caught on the long side. You will miss up this trade. For conservative way, as I said, it is the opposite. You will need to be a little bit, to be patient a little bit more. For this one, let's say you have the same resistance here, and the price breaks through this resistance. So instead of entering directly after the price breaks above this resistance, you will wait the market to retest the broken resistance here, because we have seen that once the resistance it is broken, it has a tendency to come into support, and once after it retested this support, you will need to wait for a bounce, and if it shows you a signal that the buyers are willing to continue pushing this market up, then you will reset your entry here, and your stop loss will set below this support. For this case, now it is no longer resistance, it will be support. So that is how we trade breakout conservatively. The advantage is that you will be entered on the precise price. So now you are making a high probability trade you know the high chance is that this market will continue to push up, and then you entered, so you have a high probability price. The disadvantage is that sometimes, especially in strong trends, sometimes the market might break the resistance and then continue higher, or make a very, very tiny pulls back and then continues up. Of course, if you are waiting to trade once the market bounced back from this support, of this resistance, which it was supposed to turn into support, of course you will miss up this trade. That is the disadvantage of trading the breakout with conservative way, and we will see how you can manage, you can avoid all of these things in our future lessons, and I hope you will be there to run them. I hope up to now you understand what is support and resistance and how to trade them. And if you are new to our YouTube channel, please subscribe and hit the notification bell so that you will not miss the next course. And don't forget to share, to like and share this video to your friends and family so that they get these ultimate secrets of trading. Let's continue now with practical example. Now we were using only the charts, the drawings. Now let's go to the real chart and see the practical example about these techniques. But if you want to run more in details about this, the support and trading, and as well as the techniques to trade the support and resistance, I invite you to visit our website www.methodology.rw and latest in October this year. As you see, we have completed this part of Forex beginners course, or the beginners trading courses. We have seen what is the Forex, how to trade the Forex, market hours, how to make money in Forex. So in this second course, the second category of course, which is called Money Fisher, we are going to teach you all of these skills about the candlestick pattern, about the support and resistance, trend line, moving average indicators, and we will teach you also seven strategies which you can use to trade the market depending on the market conditions. So therefore, please continue to visit our channel. This course, as you may see, that it is not open yet. If you go here to courses, Money Fisher, it is not yet open. It is coming soon, but we promise you that by October it will be out. And this is not a free course. It will be a paid course. I hope, and meanwhile, you can look for the subscription fee, and you will learn a lot about Forex trading, and you will be able to make money in Forex trading. As promised, let's see the practical examples. Now, let me take away this support in order to see how the market, how to draw support. Now, if you see well, this market is currently Japan yen, and we are in daily support, the daily time frame. But note that this skills works in any asset, whether Forex, stock, cryptocurrency, and they work at any time frame, whether monthly, weekly, daily, 4 hours, 1 hour, 15 minutes, 5 minutes, any time frame you may choose. This concept may remain the same and they work properly. The only difference is that the support and resistance of on the higher time frame have higher weight than support and resistance on the lower time frame, which means that the support of the daily support is more stronger than the 4-hour support, etc. Now you see that this market was pushing up, And then after reaching to this price, the market failed to continue lower and it continued to push up. And as we have seen, this will be our support. And how to draw support, we have seen that you can take an horizontal line from your charting tool you are using. For me, I'm using now Meta Trading View, but you can also use on MetaTrader 4. You can see this. You can take your horizontal line and place it there, or simply you can even take a box and put it here. It will be your support here. We can extend it to that level. So you will use what is easy and what is clear for you. It's all up to you. You can use a line or you can use a box, but in your future lessons, we will teach you the best way to draw that. For this case, let's use a line, for example. And now you can clearly see that our price, it is now pushing down towards this support. But this support, it has reacted, the price has reacted on this support only once. So this support, it is weak. The market can come and break it and continue lower easily. So now let's continue and see if the price has reached this support. So the price has come to this level and it fails to break it and it bounced up. So you see now it reacted here. Now it is a good indication that this support, it is very strong. And it tells us that if the price comes back to this level for the third time, it could, the high probability is that it could continue up again. And that is what happened. You see that after the market tested this level 3 times, the area, this support was deemed to be very strong, because you see now the price has struggled 3 times to break and continue lower. So this support, it is very strong. So this tells us that if the price comes back here for the 4th time, this is the 1st time, 2nd time, or 3rd time, and the 4th time, the high probability it is that the market could bounce up. Remember, we have seen the techniques to trade the market. So what the price can do here, it can bounce up or it can break down, and we have taught you 2 techniques to trade this one. What you are going to do, what you will need to do as a professional and intelligent trader, it will be to wait the market to reach to this support, because even though it is strong, no support will hold forever, it will break for sure. So what you will need to do, it is to wait the market to touch on this support. Now you see the price has broken this support. If you are aggressive trader, you should press your sell stop here. You should set your stop loss here and your stop loss above the breakout and your target somewhere below there. As I told you, the disadvantage of this the aggressive trading, when it is that the market, the price could fake you and bounce back easily. And then you see you will lose your money easily if the price make a bounce back. For the second way, we taught you it is 24 a bounce, and that is where we told you that you need to combine support and resistance with a candlestick pattern if you want to trade it properly. That is where patience it is important in forex trading, because you see that even the second day the candle of the price has not continued lower and it failed even to continue up. So you will need to be a little bit patient again. Then for the third day, you see that the price bounced back inside this resistance. For those who are familiar with candlestick pattern, this is what we call a morning star, and it is a bullish reversal candlestick pattern. And if you do not know yet what is candlestick patterns, please wait for October and subscribe to our money future trading course. As I showed you here, we will taught you everything about candlestick pattern, support, resistance, trend line, moving average, indicators, and we will teach you 7 strategies which you can use in Forex trading. As you see here, now the market has shown us that the buyers are willing, this support is strong, and the buyers are willing to push this price higher. Therefore, you can trade the bounce here. You can set your buy here, and the stop loss will be set below this support, below this low. And your take profit, you can set it, if you are a swing trader, you can set it here, or this resistance, or you can set it wherever you want, depending on who you are. And we will teach you in our course how to set the proper stop loss, take profit depending on the market conditions. And you can see now easily that the market has pushed it up and hit our profit easily without problem. This is how we trade support or resistance bounce. After that, you see that the no market will trend forever. You see that the market has found the price at had found the resistance at 92.79, and you see that the market has pushed it down. So that will be our resistance. You will need to draw your box or your resistance there, your line there, and that will be our resistance, and it will help us to know when to enter or to exit the market, because you remember the support and resistance will help us either to time of the entry or to time of the exit if we are in the trade already. Let's say if you have been entered here, this support will be our area where we have to exit. Let's continue to push the market away to see other possibilities. Now you see the market has pushed it down and it has failed to test our support. And then, let's go back in order to give you the more explanations here. Now, the price, it is coming back to our resistance, but this resistance has been tested once. Differently to this support, which we had here, where the price has been tested there 4 times. For this resistance, the price has tested it only once. Only once. This means that our resistance, it is weak. The price could break it easily and continue up. If you are a professional trader and if you know and you understand what you are doing, for a weak resistance, you will trade a breakout instead of bounce, because meaning the fact that the resistance is weak indicates that the price will break it easily. Let's push the market and see what it did. You see, on the next day, the market has broken and crossed above the resistance. That is where you enter your trade. If you are an aggressive trader, you will need to set your entry after that day close, and your stop loss will be set below the support, and your take profit will be set depending on your trading style. Let's say if you are taking a risk to reward ratio of let's say 1.5, you will set your target there, and you see that the market has hit the target, our target easily, and it continues up to 3R to the risk reward ratio here. Here, remember well the advantage. Now, for you who are in trade, because the market was very strong to continue up, and for conservative trader, for someone who was waiting the market to retest this broken resistance, you see he missed this trade. Now, you see the market has made another resistance here because it failed to break above this price and bounced it down. So this clearly means that this is our next resistance. But again, this price, the price has tested only this resistance. If you trade it there with a bounce, you can easily lose because that is a weak resistance. Because in an uptrend, what's make the trend an uptrend? It is that the market it is very strong, that it is making consistency higher highs and higher lows. If you was with us in the beginners course, I hope you remember this. Now let's show you how to trend the conservative way, the resistance. Now you see that after the price reaches this resistance level, it fails to continue higher and it is bouncing down. So now let's see what happens if the price comes back to this level. You see now the market breaks again this resistance and continue higher. I think for a aggressive breakout traders, you could have been entered here and they could make a profit. For conservative traders, you will need to be patient and wait for the market to retest this zone. Remember the disadvantage, it is that the price could turn from here and continue up and you will miss this trade. It happens also sometimes. But for conservative, you will wait the price to test this broken resistance, because we know that once the resistance is broken, it turns into support. And we know that the support, it is the area where buyers are waiting to buy. So let's push the price and see what the market did. You see now the price has tested our support now, and here you will need to be patient again, because we have seen that the best way to trade the support and the resistance to combine them with candlestick pattern. Now no one is very clear whether this market is going to bounce or whether it is going to break this support and continue lower. The only way you will know that it is to wait for candlestick pattern. So by waiting, you see that the market has given us bullish halami, and this is also another bullish reversal candlestick pattern. If you are familiar with candlestick pattern, you know that bullish halami, it is a reversal candlestick pattern. And if you are new, remember, subscribe to our course, a Money Fisher course. We will teach you all of these stuffs. So now, this is an indication that there are buyers who are willing to continue pushing this price up. What we will need to do as a trader, now as a conservative breakout trader, you will now set your buy stop above this candlestick pattern and the stop loss below this support. And if you are a swing trader, you will set you take profit here, and depending on how you can set it up there or down here. Let's for this case take a swing example, and you see that the market has pushed and hit up and hit the profit easily. This is what how we can trade support and resistance by combining them with support and resistance. And I hope you understood well how this trading style works. And if you understood it well, please, if you understood well, if you followed us properly in this course, please comment below and tell us what is this zone. This zone, tell us, is it support or resistance? Please write in a comment and tell us if it is a support and resistance and tells why. That is one the question number one. The second question tells us if it is a support or resistance. Is it strong or is it weak? And it tells us why. If it is a support or resistance, and if you see that it is weak, tell us why it is weak. If it is strong, tell us why you think it is strong. And the third comment we want you to tell us for this video, if you really, to make sure that you grabbed this concept of trading support and resistance, tell us if the price comes back on this zone, what are you going to do? We know that it could bounce down or it can break and continue higher. But one of these two options, it's high probability, another one it is low probability. Tell us in the comment please if the price comes back here. Will you be waiting for buying or for selling, and why? Believe me, this is for your own benefit, because mastering these skills, that is what going to help you to make money in forex trading in your trading career. I hope you enjoyed this video and you learned a lot about this forex trading, about this lesson. And please, if you wanted to run in a detailed, in a systematic way, in a detailed way, please wait for October and subscribe for this MyFXFund trading course, where we are going to teach you everything from candlestick to trading strategy in a detailed and systematic way. And we will teach you 7 strategies, drawing, indicator tools, and analysis, technical indicators. And we hope after this course, which is MyFXFund, you will be able to make money consistently in forex if you put into action all the information we are going to give you in these materials. I hope you enjoyed this video. Please don't forget to subscribe and to hit the notification bell if you are new to our YouTube channel, so that you will not miss out the next course. And hit the like to support our YouTube channel with your YouTube algorithm, and share this content, this video with your friends, so that they may also learn about this ultimate support and trading course. Thank you very much. See you next time.